Bought a $400,000 house recently? Congratulations, you just gave the bank a massive gift. Your first $2,000 payment didn't buy your house, it paid the bank, and over 30 years, you'll pay more in interest than the house cost. Before you pop the champagne, check your closing disclosure. Flip to page 4. See that chart? That is the payment schedule. Look closely. For the next decade, the bank gets paid first. It's a system designed to milk you first. But there is one move that lets you take your power back. Let's run the numbers. Here's the dream most homeowners bought into. After 10 years of payments, they probably own maybe a third of their house. Here's the reality check. A $400,000 home, 30-year fixed, 6%, the current national average, per Freddie Mac, March 2026, monthly payment $2,398. Month 1 interest $2,000 straight to the bank. Month 1 principal $398. That's the only part that actually builds your net worth. 10 years in, you've built a measly 16% equity. 10 years of your life, $287,000 in total payments. Only $65,000 went to principal. $220,000 straight to interest. This isn't a mistake, it's just math. And that math makes sure the lender gets their cut first, every single month for 30 straight years. While you're building memories in that house on the bank's balance sheet, you're just a performing asset, paying 6%, like clockwork. In a few minutes, I'm going to show you the one move that cuts 4 years off your mortgage with 0 new loans. But first, you need to understand how we got here, because this wasn't always the deal. After the Great Depression, banks stopped lending. People couldn't buy homes anymore. So, the government stepped in and created a new system. The 30-year mortgage. 1934, the FHA. 1938, Fannie Mae. They standardized the 30-year mortgage. Then, Fannie Mae built a system where banks could sell those loans immediately and go make another one tomorrow. Sure, it stabilized the housing market, but it also normalized a debt contract that lasts a literal generation. Then, they built the suburbs around it, made renting feel like failure. They turned a financial product into a cultural identity. That shame you feel for not owning a home by 35? That wasn't natural. It was engineered. The second you decide to buy, you trigger a whole ecosystem of people lined up to get their piece. Everyone in that room is smiling at you. And why wouldn't they? You just signed a 30-year contract to pay for their kids' Ivy League tuition. Realtor commission? 5 to 6%. On a $400,000 house, that's up to $24,000. Gone the second you close. Origination fees? Another $2,000 to $4,000 before you've spent one night there. Then there's PMI. If you put down less than 20%, you're paying private mortgage insurance every single month. And who does that protect? Not you. The bank. If you default, PMI pays them. You are literally paying insurance for the people who already own most of your house. Read that again. Title, insurance, appraisal, inspection. By the time the paperwork ends, $8,000 to $20,000 is gone before you've unpacked a single box. Nobody at that closing table makes a single dime if you decide to buy less house. Every number they showed you was designed to get you to sign, not to protect you, to close the deal. Now, I know what some of you are thinking. I got a 5.5% rate. I did my research. I'm fine. Maybe, but here's the question nobody asked you at closing. What's your total interest over the life of the loan? Not your rate, your total. Pull out that amortization schedule. Add up every single interest payment. For most people on a $400,000 loan, that number is somewhere between $400,000 and $500,000. In interest alone, your rate was great. The math still wasn't. A friend told me he refinanced and was saving $180 a month. So, I asked him one question. Did you calculate the total interest on the new loan? Silence. Here's what the commercials don't tell you. The moment you refinance, you reset the amortization schedule. Back to day one. Front-loaded interest, all over again. He was 7 years in, on track to pay off by year 30. After the refi, clock resets, now paying off by year 37. Over the life of that new loan, he paid way more in total interest than if he'd never picked up the phone. He called me back 2 hours later. Did not sound happy. Every time you refi, you're resetting your amortization back to day one. And first-month borrowers, they pay almost pure interest. That's not a side effect. That is the product. Move number 1. Run the total interest before you refi. When a refi offer hits your inbox, don't just look at the monthly savings. Calculate the total interest on the new loan from day one to the final payment. Compare that to what's left on your current loan. If that new number is higher, you just found the bank's profit margin. Most people never run that math. That's exactly why most people take the deal. This is how the system works. Interest first, ownership later. Move number 2, the biweekly payment hack. Pay half your mortgage every 2 weeks. Same payment, different timing. 26 half payments equals 13 full payments a year. That's one extra payment annually. You'll shave off roughly 4 years and save tens of thousands in interest. Let me show you what that actually looks like. On a $400,000 loan at 6%, standard 30-year, you pay off in 360 months. Switch to biweekly, you're done in roughly 26 years. Same loan, same rate, 4 years gone. Just by changing when you send the check. No new loan, no permission needed. They built the math, you just found the exit strategy. Move number 3, 15-year versus 30-year. On a $400,000 loan at 6%, 30-year total interest, roughly $463,000. 15-year total interest, roughly $207,000. That is a $256,000 difference. Not a rounding error. That is a down payment on a second property. Run those numbers before you sign anything. The difference? They never showed you the full picture. Now, you've seen it. The house isn't the trap. Not understanding the math is. Now you do. Use it. The flood is already here. You feel it every day. Now you're ready to board the ark. Most people are still treading water. But you just learned how to swim. I'm Noah. See you on the ark.